Hi, Vi from myfractalrange.com here. It's Friday, 8th of July 2022. Week is almost over, and now it's time to talk about the markets, about the current signals, all the changes, and how I'm preparing for the next week. Okay, so first of all, let's take a look what happened during this week. It was actually an interesting week. Uh, in my last video I was talking about not shorting the markets because first of all correlations were not very high, uh, and SPY and other major indices had positive short-term momentum, and range-wise upside downside ratio was also not good for shorts. So first of all, let's take a look. So markets are still open. We have about 1 hour till the US weekly close. Um, for now, here's what happened. So this week, SPY is up 229 basis points. QQQ is up even more, almost 5%, and small cap Russell IWM is up 268 basis points. What is interesting that VIX is also below 25. Yields have recovered a bit, and yeah, so that was the reason why bonds went down a little. So during this week, TLT is down 300 basis points. Let's move to myfractalrange.com. Here I have this watch list with all the most important assets in my opinion. This data is real time. I refreshed all those ranges few minutes before the recording, so it's a recent data. If we filter everything based on upside and downside ratio, we can see that from this list, biggest upside is for SHAI. Another interesting point regarding fixed income. If we take a look at TLT, it also has 2.29 upside downside ratio. So again, I remain without bond positions, so I have no positions in bonds, but basically, yeah, I'm definitely not shorting those. We'll see how the signal changes in over the next week, but for now we are still not there. The lowest upside downside ratio is on a dollar, and that's because I will not talk about yields now. Because we already covered bonds, and it has a reverse relationship, so no need to talk about that. So obviously TLT has high upside downside ratio, and US 10-year yield has a low upside downside ratio. It's absolutely normal, and that's what you can expect. But the interesting thing to note is dollar. I expect that we can see a correction in dollar next week. We'll see how it goes, but now it's definitely not time to add to the dollars long dollar position. Even though I remain very bullish on dollars, so nothing has changed from macro and fundamental perspective. But signal tells me that we can expect a correction. So now real-time top end of my fractal range is 28.83 for dollar, and we are at 28.57. So not a lot of potential upside here. From the position perspective, nothing has changed. I'm still holding cash mostly, so USD, and have two spreads. So it's XLU IWM and EWH versus EWO. I will cover those spreads a bit later, but basically no changes in that front. So from range perspective, quite a lot of potential upside on equity indices and main sectors. So Of course, we can see that SPY is almost in the middle of a range. Upside downside ratio is 1.12. QQQ is exactly in the middle of a range. So from probability perspective, it's not tradable. Even though when I was talking that I'm very bearish on equities, but also last week we had no potential signals for shorting the market, so patience paid off, and actually it was a great idea to remain without positions. From the sectors that I monitor, XLU looks quite good. Still, it looks quite good with an upside downside ratio of 1.42. And XLU IWM, this one is very interesting because I have a position. So there is one thing that I like and one thing that I don't like. So of course next week we'll show how it goes, and maybe I will close a position or maybe not. We'll see. So what I like is of course upside downside ratio for the spread, which is 2.61. But what I don't like is that this asset and overall markets are becoming more and more choppy, so Hurst exponent is quite low. 3-month Hurst of 0.64 is not high enough for me to be very confident in it. But yes, a week ago, based on range, I said that I expect this spread to correct and to go down a bit, and actually that's exactly what happened. So this week XLU IWM went down almost 5%. Now my spread is approximately 150 basis points in profit still, but we had the expected correction, and the main reason why I was expecting this correction, if you remember, was the range and upside downside ratio, which was quite small. But now this upside downside ratio is quite big, so I'm still keeping it. But just because of a chop and low Hurst exponents, I will be ready to reduce or close that spread next week if needed. Okay, so that's about it from range perspective. Markets are still not shortable. This short covering and bear market rally can continue. Of course, I don't expect this rally to continue for a long time, based on all the signals. But yeah, now it's definitely not the time to short the market. Okay, and now quickly let's move to correlations. Today I will start from short-term correlations because those are more interesting, especially right now. So let's start from SPY sectors and all the major assets. So I will run the script and we will have a 5-day correlation matrices. Here we go. So let's start from daily return correlations. As you can see, first of all, TLT SPY is slightly positive, but overall cross-sector correlations are not high. So if we take a look into this line where there are all those correlations to the SPY, we can see that on a 5-day basis, XLK has a 0.47, IWM 0.82, QQQ 0.49. So now basically we see that tech is trading separately from the SPY, and XLP, XLRE, XLU, and XLV also has quite low correlation. So risk is still not building up, and that's why I'm not confident about shorting the markets, and I expect the chop to continue. So from the signal perspective, basically it's good for bearish view that finally we see TLT SPY correlation slightly positive, but because of sector correlations not being very high, it's still red light for shorting the market. So these are daily returns. Now let's move to rolling 5 days return correlation. So I explained what it means in my previous video. That video covers all the signals and the tools I use. So if you are interested in learning how I use and interpret this data, feel free to watch my last week's video. Okay, and here situation is a bit different. So of course TLT SPY is very, very negative. So basically if you buy SPY and TLT and hold it for 5 days, you can expect those assets to go to completely opposite directions. That's it. About sector correlations, these are higher compared to daily returns. These are higher, so it's a good thing for my overall view. But as I explained last week, I only act when I see signals on daily return correlations as well. So now we can see that tech and SPY has a correlation of 0.99, which is very high. Financial 0.91 and REITs 0.96. These are quite high, but again, we're still not there from a daily return correlation perspective. And I want to cover one thing, because there was a question about TLT UUP correlation and how to interpret that. And actually the answer is very simple. I rarely use this exact correlation because it's just all over the place. This is mostly macro relationship, and it doesn't matter which time frame you use. Basically you can see that it just goes up and down and up and down and up and down. You will see the 30-day correlation chart, and it actually looks the same. So my answer would be that most important correlations are stock bond correlations and sector correlations to the SPY itself. And at least in my process, I rarely use bond dollar correlations as some kind of signal. Okay, now we will move to 10-day color correlation. I will try to make this video shorter. So I will try to cover everything fast. Okay, so from a daily return correlations on 10 days, as you can see, those are also not high. So sector correlations are really not high. We see that XLU is 0.31, XLP is 0.83, REITs 0.84, financials are 0.94, and SPY to QQQ is also 0.994, but it's still risk is building up slightly on a 10-day basis, but we are still not there from a signal perspective. On a rolling 5-day basis, again, same situation as we saw on a 5-day correlation matrices, that overall correlations are higher. So if you hold those assets for longer periods of time, so 10 days, for example, you can expect all the sectors to go quite strongly to go to the same direction. So it's not a good idea from portfolio management and overall risk management perspective. Yeah, so this video will be shorter because not a lot of has changed, so signal is still not there, and markets are choppy, and upwards move can continue from that. So it's just a simple example. Okay, from 30-day we will see, I believe we will see the same thing here. Okay, so on a rolling 5-day basis, those correlations are quite high. You can see that financials to SPY 0.98, XLI 0.96, XLK 0.99, and so on. And that's what you can expect, because when we move to momentum, you will see that situation is the same, that on 30-day basis momentum is not very strong from a positive side, but short-term momentum is still positive. Good. So daily returns are also not really high, because my favorite XLU is only 0.56, REITs 0.84, to QQQ. If we look to the SPY, REITs are 0.88, XLU 0.68. So still not extreme. Still not extreme. We have covered SPY sectors and other stuff. So basically, from what we saw here, we can make the same conclusions as we did 1 week ago, that basically it's still not a good idea to be shorting the markets. I never go counter trend and counter cycle, so that's why I'm not long the markets either. So you can see, same from range perspective, that a lot of assets are in the middle of a range, and based on ranges and correlations, I can just repeat the same thing I told you 1 week ago, that basically we are still not there. Now we'll now we will quickly cover momentum scores for SPY sector and other stuff, and then we will move to developed markets, because I monitor developed markets quite a lot. So again, let's start from short-term momentum. And I tweeted yesterday that basically it's strange that people are shorting assets that have positive momentum scores, and they expect to make money. So here what we can see, that SPY on a 5-day basis has 0.92 momentum score. Now even GBTC, so Bitcoin, has also positive momentum score. What has the negative momentum? So of course gold, silver, dollar is very strong, still very strong positive momentum. So yeah, as you can see, on a 5-day basis, main indices have a positive momentum score, and it's definitely a sign that it's not a good idea to be shorting those. Well, except DIA, so Dow Jones Industrials. That signal is a bit different, but overall, if we are talking about things like SPY or IWM or QQQ, no, shorting signals are not there. And to be honest, I rarely trade DIA or Dow Jones, because from volatility perspective, and of course as traders we love volatility, we need volatility to be able to make some money in a market. So from volatility perspective, things like QQQ and IWM, in my opinion, are a lot more suitable for us as a traders and active risk managers. Okay, so now let's move to 10-day momentum. So here we are, and again, gold is very negative, silver is very negative, dollar is very strong, IWM has a positive momentum, QQQ has a positive momentum, SPY has a positive momentum. Of course, on a 5-day basis, that momentum is stronger, but score-wise, but it's still positive momentum, so no changes there. And again, I remain not shorting the markets. If you are interested to see those scores, I tweet those on a daily basis, especially for SPY sectors and other stuff. And when I'll be covering developed markets, you can just stop the video if you want to study all those correlation matrices and momentum charts. And the last is 30-day momentum, and then we'll move to developed markets. Good, so here we have the same situation with the dollar. Dollar is very strong. IWM has neutral momentum. 0.04 is what I call a neutral momentum. Basically anything in between minus 0.1 and 0.1, I just don't call it, I don't call it positive or negative, it's just neutral in my opinion. QQQ on a 30-day basis has a stronger positive momentum, and of course this recent move in tech helped a lot. for that. So what else? Bitcoin is negative. Of course, gold and silver is negative. Um, and SPY is neutral. So basically, IWM and SPY has neutral momentum. Meanwhile, while QQQ shows some positive strength here. Okay, so hope this helps. Now we'll move to correlations and the developed markets. And we'll start from 5 days. Of course, I'm mostly interested in EWH and EWO, but let's take a look into all the signals. So, as you know from a previous video, here I mostly monitor correlation to the SPY. So, and what we can see from a 5-day basis is actually that EWH has now has quite a strong correlation, which is 0.86. And EWO still has a very low correlation, which is 0.31. So I will check all the signals on EWH, EWO spread, because for me to hold those for another week, I need those correlations to be a bit lower. So it doesn't mean that I will close the position now. The position is profitable, but maybe I will just make myself a note that I need to monitor it more closely. From a rolling 5-day perspective, we see something that I really like as a swing trader. So because of course I hold that trade for almost 2 weeks now, so that on a rolling 5-day basis, EWH has actually a negative correlation, and which is minus 0.68, and EWO has 0.29, which is also low. So it's quite a good thing. Norway, I was talking about Norway previous week, has almost no correlation to SPY now. EWP has negative correlation, and yeah, so if you're interested, you can stop the video and look into those numbers more closely. Okay, let's look at 10 days. So here we can see that EWH still has quite low correlation to the SPY, which is 0.24, and EWO is also not high at 0.41. So I like this thing, and basically nothing has changed from previous week, because all the interesting candidates are the same. So of course Norway, EWH and EWO especially. From rolling 5-day basis, 10-day correlation, EWH 0.11 and EWO 0.62, and again same candidates, so Norway and EWH stands out here. And quickly let's move to 30 days, and then we'll talk about what we just saw and what is the plan for the next week. So on a 30-day basis, again, if we see that 0.76 EWH and 0.71 EWO is relatively low compared to other assets, so nothing too striking or very interesting here. So situation is approximately the same. And also I forgot to mention one thing. When I have a spread, sometimes I like to view the overall correlation of those two assets. Of course, when you have a spread, it's not that important, but before opening a spread, I always look at those numbers. So I forgot to mention it a week ago, so I will just show you an example that what stands out in this chart is actually EWH, EWO. And a few weeks ago, this number was even lower. So, and actually that was another reason why I added this spread to the watch list, and after some time I opened a position in it. So yeah, hope this helps. Okay, so we will not do emerging markets. China is very interesting there. So things like FXI, but because I already have a position in WH, so I'm not trading FXI because these two assets are very correlated. Now I will quickly show you commodities, because this is where it gets interesting. I will cover commodities very quickly, and we will end this video, because I don't know if you find those videos useful. Let me know in the comments, and I will do my best to continue doing them. But with my process, sometimes there are a lot of weeks when signal remains the same, so these videos will not always be something new. Okay, so from a 30-day basis on a momentum score, of course, copper looks terrible. Actually, as I said on Twitter Spaces some weeks ago, commodities look terrible, but I just want to show you why, because you can see that not a lot of positive values. Almost everything is negative except coffee and palladium from 30-day basis, but still this positive momentum is not very strong, and volatility, choppiness, not volatility, of those assets is quite big. So from 30-day basis, commodities are not very interesting, but now when we go to shorter time frames, you will see what I mean when I say about things being terrible. So of course, silver, soybeans, copper is very negative. COW is a positive. Palladium is also a bit positive. UNG, but overall, why I don't like trading commodities in this environment, because they are very choppy, and any news or any moves in dollar itself, because all of those has very strong relationship to the dollar, and in this environment I tend to skip those from my portfolios, but yeah, basically if you are interested in what I have in my watch list, so based on those scores, I would take palladium as a potential candidate to monitor in my watch list. I don't have any positions, but that's how I would use those numbers. And 10-day basis. Okay, so COW has a positive, palladium also has a positive, of course silver and copper looks terrible, DBB looks terrible, so not a lot of changes here. Oil has a neutral momentum. Actually today oil had quite a good day, so we'll see what happens next week. But basically same candidate. So silver looks terrible, silver and copper looks terrible in all time frames. So this video is not very exciting or something new, because basically conclusions after this remain the same. That basically we are still not shorting the main indices. Also Hearst exponents across the board are going lower, so I expect markets to be very choppy, and yeah, so I remain holding cash. XLU, IWM, what I like is upside downside ratio on a range. What I don't like is that Hearst exponent goes lower every day this week. And EWH, EWO, I still like Hearst exponents, and I still like upside downside ratio, so I'm keeping that. And I'm not trading China and some other ETFs just because they are very, very highly correlated to EWH. So I hope I answered the question regarding TLT UUP, and also hope this video helps. Subscribe for new videos, and let me know if you find those videos useful, because like I said, my process is very systematic and there will be weeks when I will just repeat the same thing again, because signals will not change. And actually I think it's a good thing about a process, because if I had a process where things would change on a daily basis, it would be a lot harder to trade and risk manage things. Okay, so this was Y from myfractalrange.com. Hope you will have a great weekend and great next trading week. Again, I encourage you to let me know if you find those videos useful or not, and what topics you want me to cover next. And yeah, thanks. Bye.